Welcome to the September 10th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our nightly report. Hopefully serves a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. And we try to keep it simple with just price action, a few moving averages, 10, 20, 50, 200, a relative strength line versus the S&P 500, and volume. In tonight's video, we're going to run through a few broad market averages, and then we'll get into open positions in our model portfolio. And finally, we'll take a look and see what's out there in terms of potential setups. First up is the NASDAQ composite, which has struggled as of late, especially since that stalling action on 9/1. This is the stall right here. Higher volume with a close at the lows of the session, even though there was a gain on the day. The NASDAQ composite closed higher, 0.3% higher. The price closed at the lows of the session, so that was selling into strength. And as we can see, over the next few days, the price failed to push through the high of 9/1. And over the past two sessions, the price has closed below the low of 9/1. So where does that leave the NASDAQ in the short term? If it can hold above the 10-day EMA, great. If not, then obviously the 20 is a big support level. And on the hourly chart, we have a potential lower high here. So if this is going to turn into an ABC correction, we have a 1.3% sell-off. There's the B up, and then a C wave down for 1.3%. So that's around 15,140, which would put it close to the 20. And then if we go to the weekly, if the 20 fails to hold, we'd look for max damage on any pullback to be around this rising 10-week MA, where there's support from the highs of the last base. And that's about 2.3% away. The S&P 500 is a bit weaker, already below the 10. Ugly day on Thursday. And it looks like an undercut of the 20 EMA is likely. We'll have to see what happens from there. The 10-week MA is also in play. It's about 1.2% away. We'll just have to see how the S&P reacts. One, if it breaks the 20 EMA, will it break the 20 EMA and then reverse back up, or will there be some sort of undercut of this last low here on 826? IWP, which tracks mid-cap growth, a bit stronger than the S&P 500s and still holding on to the 10-day EMA, but not by much. And if it fails to hold Thursday's low, could pull back to the 20. And the 10-week MA would be the max pain for here on a pullback around 230. And when I say the max pain, I mean, that's just an obvious support level. Anything can happen in the market. We could see a pullback that undercuts the last swing low of 5-6% away. And last up is IWM, which is just a massive chop fest on the daily. You don't even want to really look at that. And on the weekly, there was a base here which failed to hold, led to a breakdown. And then there's a new base right here, which had a bit of a W shape, though it had a higher low here. The price tried to push through the midpoint, and that would have been bullish if it could have held above 225, though it didn't. It's pulling back into the 10-week MA. At this point, we're just looking for the price to hold above the rising 40-week moving average. On to positions in the model portfolio. We sold partial size in Zim with a plus 20% gain. We just raised a stop on another quarter of the position to lock in about a 19% gain, and we're willing to let the rest go with a stop, most likely break of the 10-day EMA. And that'll depend. If it continues to run up without any sort of pullback, we might just sell the remaining position into strength. DDOG, we're long from about a 138 average entry price. Not an ideal close today off the highs of the session, but given that the market sold off, not too bad. Stop for now will likely be the low of the 9/8 reversal candle. Snap, we're long from around 75 average price. hasn't done much. We like the pattern overall. It's tightening up, but it's failed to move out. And it may have a tough time holding up if the market continues to sell off. If it breaks down below 73, we'll probably exit. And we have MELI, which we purchased on a breakout. We had some shares here at 1877. We added more around 1900. Tried to break out on 9.2. Closed off the highs of the session though. Following 2 days weren't too bad, just light volume chop, but price sold off on 9.8 on a pickup in volume. Did manage to hold the 1900 whole number and the 10-day EMA, but closed below both on Thursday, so we probably going to see some sort of pullback to the 20-day EMA unless the price action can recover back above the 10 on Friday. If MELI continues to sell off, we'll likely exit with a 1% loss. And just for those who want to be a bit more patient with this trade, there's this uptrend line here which coincides with the 10-day EMA, with the 20-day EMA, pardon me, and is about a 2.5 to 3% pullback from the breakout pivot. So that would be a good spot for the pullback to hold. If it breaks down below the 20 and doesn't reverse back immediately, that would be a sell signal. As for potential long setups, if the market doesn't continue to sell off, RBLX, which is an interesting day on Thursday with a bullish outside day or engulfing pattern. Look for any pullback into this 85 area as a potential buy with a stop below Thursday's low. DLO, we're just keeping an eye on here. Could be in play over the 2-day high. ZI is another interesting, fairly new IPO from May of this year. Right now it's sitting in a 5-week flat base, and it's a flat base because the pullback is less than 15% off the highs. So flat bases are usually 5 weeks or more in length, and this is 1, 2, 3, 4, and its 5th week. Finding some support at the 20-day EMA. And on the hourly chart, we'd like to see the price tighten up here above 64 and then attempt to break through this 20-period EMA. NTNX, big volume gap up with some decent follow through. So far it's a nice 2-bar pullback, bull flag type look. Entry would be over Thursday's high with a stop beneath Thursday's low. CMG has been chopping around in a tight range the past few weeks. A little bit of a false breakout on Thursday. Now, if the market holds up and CMG stays above this 10-day EMA, then look for a move back through the 9.9 high as an entry. Crowd is interesting after a big volume gap up and some fall through to the upside. Price disappointed a bit with this pullback here to the 10 that failed. Now the price action has been holding up at the 20-day EMA the past few days. Look for a move above the 2-day high as a potential buy entry. And NVIDIA, which was super strong in mid-August, stalled out below 230, undercut the prior low, and it's just trying to hold on to the 10 EMA. Could get interesting on the hourly chart if it breaks this downtrend line and can get back above the 20-day or the 20-period EMA on the hourly. And for those of you who have access to the chat room, Darren dropped by in the chat room today. He's usually in the crypto room. Mentioned FCUV as a potential buy entry after a big volume advance on 9/1. The price actions pulled back over the past few days and now has 2 inside days in a row. So a move through the two-day high is a potential entry. And so there's 4 open positions in the model portfolio. We'll see how those hold up. We could be in cash within the next few days, or we could still be long all these names here. We'll just have to see. All right, that's a wrap for tonight's video. Thank you for joining me. Have a great weekend, and we'll see you next week.